So a very good evening to everyone and a very warm welcome to today's webinar hosted by Indictrans and Sejal. It's great to see the participants from various backgrounds including finance team, ERPNext users and implementation partners. Thank you once again for encouraging response to our part 1 of accounting series in ERPNext. So today we are continuing the journey with part 2 where the focus is on the stock module. This play a very critical role in ensuring accurate financial reports and compliance in ERPNext. Before we begin, so I want to give a quick update before we introduce to our speaker of today. We will have a Q&A section in the end. So if you have any questions, you can comment in the chat box. So now it's time to introduce today's speaker, CA Ghanshyam Brahmabhat. Ghanshyam brings a deep expertise in ERPNext accounting, especially, and has helped multi-organizations to streamline their finance and stock process effectively. So yes, I would like to welcome Ghanshyam. Thank you for being us with today. Over to you, Ghanshyam.
Thank you, Sejal, for a warm welcome, and good evening to each and everyone who has joined this webinar on the accounting nuances of ERPNext. So to start with, as I usually start my webinars, this is my second part. So would like to share a very important aspect of why this webinar is very important. As you must have heard that for a want of a nail, the kingdom was lost. For want of a shoe, the horse was lost. For want of a horse, the rider was lost. And for want of a rider, the battle was lost. And when the battle was lost, the kingdom was lost. All for the want of a horseshoe nail. How insignificant the horseshoe nail is when we are looking at the scale of the entire kingdom. But that small thing, if not taken care of, the kingdom was lost. The same thing applies for the ERPNext project implementation. I believe the audience which we are having today are those people who want to make their ERPNext implementation a success. In order to have that success, what small thing, that is the configuration, that we need to take care of, or we must be educated of in order to have a success in ERP implementation. Why the small thing matters? Because specifically for ERPNext, for a want of a correct configuration, the master data, if the configuration is wrong, master data is wrong. If the master data is wrong, the transaction will be wrong. If the transaction will be wrong, there will be the wrong finance impact. If the finance impact is showing the wrong figures, if the figures are wrong, the statements which you are looking at, that will be showing you the wrong figures. If the figures and the financial statements are wrong, you are bound to make decision which will be significantly incorrect. And that's where, if the decision is wrong, the entire company goes, the entire company loses. All for a want of a correct configuration. So in today's series, what we are going to see that in the accounting nuances in ERPNext part 2, we are going to see the stock module, that how stock module talks with accounting. Our stock module is making an impact in accounting. And if that is taken care of fundamentally, holistically, then the entire organization is going to get the good fruits. Once again, welcome to everyone. We are starting the accounting nuances ERPNext episode number 2 related to stock module. What I'll be covering in today's session, or rather just to give a brief on what session we had today till now. We had a session on buying module. You can refer our Indictrans YouTube channel The session was conducted on 23rd of May 2025. Today we are going to go through the stock module. In future, we'll cover the selling and accounting module. What topic we are going to see today, specifically related to the stock module? First is COA, Chart of Accounts Configurations. Second, the stock entries, stock vouchers. In our language, that is in the language of IT or in the language of ERPNext framework, that is doc types. But for accounting, if you are using Tally or if you are, if you are an accountant, you are used to this word of voucher. The other, some few interesting features that ERPNext has, you might be aware of, but for certain points which I would like to draw your attention, we'll see that. And what are the best practices related to the stock module in connection with the accounting? So this is what we are going to see forward or listen on as we are progressing in our webinar. So chart of accounts is the fundamental framework, or you can say it is the foundation of the company which is running. Because if the chart of accounts is perfect, if the base is perfect, you can make the structure on the foundation. So if the foundation is strong, concrete and clear, then you are going to get the clear results. So I hope everyone over here who are used to ERPNext, they must have seen this section of account type while creating a ledger in ERPNext. And this is very, very critical or very important for us. I'll tell you how. What are the account types which are relevant for the stock module and for which we should be having a complete clarity on? The first is, if you will click on this option for choosing this proper correct account type, you will find an option of stock. What does it say? It says that the ledger which you are creating, that ledger belongs to stock. It is a stock ledger. So while moving forward, any kind of transactions wherein there is a requirement to tag the correct stock ledger, the configuration for which the account type should be defined as is the stock. The second configuration, which is important for us in this stock module, is to define the cost of goods sold account. This is very, very important, because as and when you will be creating the delivery note, as and when the system will be booking the COGS against the delivery of the goods, this is where the system will automatically pick an account which is defined, or the account type of that ledger is defined as COGS. Third account type is stock adjustment. Where does it come? It comes in stock reconciliation. In ERPNext, there is a feature of stock reconciliation. Over there, you will find there is a difference account coming, when you are selecting as an the purpose for the stock reconciliation is to actually do the reconciliation. And that's where the stock adjustment account type system calls for that. And for those ledger, if this account type is defined as stock adjustment, then the user will select the correct ledger for it. Number 4, stock received but not billed. It is nothing but a ledger which is a kind of a ledger which writes off, which has to be, the balance has to be 0 every time. But if there is any balance pending, then the meaning is either one action has been completed, the other action is pending. Just to give you an example, you must have seen in the buying module where you are making purchase invoice and purchase receipt. So if you will make a purchase invoice, the stock received but not billed account will be debited. And if you make the purchase receipt, the stock received but not billed account is getting credited. So if either or is not done, the balance will remain open. So at the end of the day, this account is nothing but for us to make sure that the invoice has been booked properly against the receipt of the goods, and either or. So this account types plays a very crucial role when you are going at a transaction level. And at that transaction level, if you want the user not to commit the mistakes, this account type has to be defined correctly at the COA level. I hope the point which I have made is making, you are able to understand it. Now, finally, as you are making your chart of accounts, you are configuring your chart of accounts, where is the impact in the ERPNext coming when you are doing the stock entries? As you are aware of, the stock entries itself a doc type in ERPNext, which we are using for making the stock transactions. So today I would like to draw your attention to where exactly those stock entries make impact in accounting. So if you see this, I have noted here the entry types which are currently available in the standard ERPNext. So these are the various entry type. You can see that there is entry type for material transfer. Another is for manufacture, issue, manufacture, receipt, repack, disassemble, consumption, and send to contractor. So these are the currently stock entry type available in standard ERPNext. And each of these entry type is having an accounting impact. So I have segregated those entries. Please pardon me. I have segregated those entries and linked with, the accounting impact it generates. So first you can see that as you are doing a material transfer, if you are transferring your goods from one warehouse to another warehouse, so what is happening? It is nothing but change of hands. The goods are going from one X warehouse to Y warehouse. So whatever stock ledgers are linked with those warehouse, system is going to generate accounting impact accordingly. Just for an example, if there is a warehouse which is a raw material warehouse, and I would have tagged the stock ledger of raw material with that warehouse. There is a warehouse which is a WIP warehouse where I'm doing the production. So I would have defined that warehouse. I would have tagged that warehouse with an accounting ledger which is nothing but WIP stock. Okay, so if I'll be transferring my goods from raw material to WIP warehouse, then there will be an accounting impact which says that WIP stock account is debited and the respective raw material account is getting credited. So this is how it generates impact when you are selecting or using material transfer stock entry types. Material issue, this is very important. If we are clear with these entry types and their accounting impact, this really helps us in consulting our client or deciding for our organization wherein certain entry types has to be given permission to particular user. Otherwise, there is a good chance of messing up with the stock entries, and there is a good chance of messing up with the entire stock thing if we are not clear on this. So second entry type is material issue, where the stock is getting credited, stock is getting reduced, and what is getting booked? It is getting reduced against an expense. Just for an example, if in a big company which is a manufacturing company and the goods are getting issued for production, and the goods cannot be directly linked with a particular work order, then you are booking, whenever you will be using material issue entry type, the expense is getting booked at the same point of time when the goods are getting issued. So material issue is that type of entry. Second is manufacturing. What happens in manufacture? It's nothing but change of hands. As I have shown you in the first, as we discussed in our first entry type, that impact is coming. Plus, if you are defining an overhead, kindly understand, I believe that you know this concept of adding the overhead expenses while generating a manufacturing entry or while doing the manufacturing entry. So if you want to load those expenses onto the stock, then what happens? The expense gets loaded on that FG, and the respective account which is defined or which is tagged for those overheads, that is getting credited, which is reversed. So expense reversal is happening and those values are getting added into the value of the stock. The next type is material receipt. What it does? Material receipt is nothing but directly you are getting some samples from your customer. Let's say you are getting sample goods, or you have found, a good which was not at all present in the system. So if you are choosing this material receipt, then the stock is getting debited. But what will get credit? It will be a revenue account or it can be an expense account. So expense is getting reversed. Generally revenue people don't use, but expense is getting reversed. So in this material receipt, the stock is getting into the system, is getting added into the system, and the expense is getting reversed. Second is repack and disassemble. So change of hands, it is nothing. If you are doing a repack or if it is a disassembly, then the impact that we found in the first entry, the same impact is getting generated in the repack and disassemble entries also. Material consumed for manufacturing. At this, if you are using this, where there is a concept of perpetual inventory. But if perpetual inventory is not used and you are directly consuming goods at the time of manufacturing itself, so you can book the entire expense at the time of manufacturing of the goods itself. That is where this entry type, this is how this entry type is going to make an impact in accounting. Finally, sending it to the subcontractor. It is nothing. Again, it's a change of hands where you are sending goods from your warehouse to the warehouse of the subcontractor. So if you are having a ledger in your balance sheet which says that how many of goods or how much of goods are lying or pending at the other subcontractor, this is what, if you are using this entry type, it is nothing but changing the hands of the nature of the ledger of a particular stock. So this is in gist how the impact is happening. If this is clear, if this is, if we are clear with what impact it generates at different entry level, we'll do it correctly when the transaction happens. Second, apart this we discussed about the stock entry type. Going forward, my next topic is there are stock vouchers or the doc types where the accounting impact is coming. As you can see that when you are doing any purchase receipt, or if you are making a purchase invoice with the update stock tick mark, then the stock ledger with an adjustment ledger getting, affected. So if I say that if you're only creating purchase receipt, then goods will get debited and stock received but not billed. I think you must have heard of this. So that will be getting affected if you are making just a purchase receipt. But if you are using update stock, then this adjustment ledger, which is stock received but not billed, will not come into the picture. It will directly impact your stock account and the respective creditor's account. So this is a doc type, this is a voucher type where you are getting the impact of both the things, the impact of stock and the account at the same time. Similar way, delivery note and sales invoice. Again, in the delivery note, the COGS is getting booked, cost of goods sold, against the stock ledgers. The stock is going out, expense is getting booked. If you are using the sales invoice with the update stock, the same entry is getting generated, but in addition to the debtor's account. So that is what the impact is coming. Interesting voucher type is the landed cost voucher. I hope you remember, we discuss currently about the various cost of chart of accounts, wherein the stock adjustment account type was assigned to a ledger. So this is where when you are making the landed cost, if the account type is defined that, then you can put that as an expense reversal. Whatever expenses you are going to load onto the stock against which a reversal is happening. So that configurations helps us. And this is where the landed cost. So you are making landed cost. You are making a record into the landed cost voucher doc type, but it is getting posted or it is getting impacted into the purchase receipts or the purchase invoice, which we have already made. So landed cost voucher fundamentally is not a doc type which is getting posted or it is creating a record into the GLs. I hope we are aware of what all doc types or vouchers are mentioned here. You will find a tag of each of those in the GL, but there is no tag of GL for LCVs because LCV is directly impacting the purchase receipts and invoice, which is ultimately affecting the GLs. Stock reconciliation in itself is having its own existence. It's a doc type, it's a voucher type. You will find directly an impact of the stock and reconciliation into the GLs. It is nothing if the stock is more than what we have, what we are having into the system. Then the stock account is getting impacted against a stock adjustment account, which will be credited, and vice versa if the stock is lesser. Subcontracting receipt. This is interesting, and I think most of my audience would have used this feature for subcontracting. That when you are receiving the subcontracted goods, then what is happening? You are receiving goods. You sent a goods of 100 rupees for an example, and the charges for the job work was 20 rupees. So when you will receive that goods back, you will receive the goods of 120. If any goods you would have supplied to be utilized for manufacturing in the subcontracting, that stock value will also be added into the goods which you have received, and the stock which has gone out will be credited at the same time in the subcontracting receipt. So in subcontracting receipt, you are finding both the things happening. That is, stock is coming back, expense reversal is happening, and at the same time, expense booking is also happening for those goods which are sent outside. So in a gist, these are the voucher types, these are the doc types which are directly having impact in your GLs, which is, where the accounting treatment is happening. So moving on to my next topic, which is the interesting features in stock module of ERPNext. I would like to draw your kind attention to the two features, which is interesting. I found the interesting part into that. The first one is the inventory dimension. You must have heard of this. And the most interesting part of inventory dimension is it acts like an accounting dimension. It is similar to the accounting dimension, but it only generates impact into the stock balance and stock ledger report. It is not generating any kind of impact on the accounting vouchers, which we have seen till now. If you'll open your GLs, if you'll open your profit and loss, if you'll open your balance sheet, inventory dimension will not be there. It is only at the stock balance and stock ledger level where this inventory dimension is, coming into the place and helping us like we are defining the accounting dimension. I hope my knowledgeable audience will be aware of what is accounting dimension. But to give a brief of that, it's nothing but tagging your financial transactions with a certain parameter, which can be a doc type of location or GSTN or anything. So it is just tagging your financial transaction with a particular tag. In the same way, all of your stock transactions which are happening in system, if you want to define a particular tag over it, then this is where we define an inventory dimension. The next feature which I found interesting was, and which is having impact on ERPNext accounting module is bill of entry. So whenever any import is happening, specifically this is related to India, where we are importing goods. If the goods are getting imported, you are creating a bill of entry. Bill of entry is nothing but it's a government norm which we have to fulfill by creating not just the voucher into our system, but by creating a bill of entry. So when you create a bill of entry, what happens? You are defining a customs you are defining custom charges, you are defining freight charges. And how does it impact the goods? The value of those charges which are directly associated with your purchase has to be added into the value of goods. So the beautiful feature in ERPNext is, if you are creating a bill of entry, which is an import, then these customs and freight charges, whatever charges you incur at the time of import, can be easily loaded on the value of goods by creating an LCV. So from bill of entry, there are very nicely Frappe has given us the buttons to create the LCV for this particular transaction. At the same time, it is also important to pay the customs duty, which is directly associated with this import. So they have given a provision to create a journal entry where we can directly pay the custom charges. Because see, when you are buying goods, you are paying to what all kind of vendors. The first vendor is the supplier of your goods. Second vendor will be your freights. Third vendor will be your government, who is charging this customs and charges. So the provision to directly create a journal entry for the payment of customs has been beautifully provided in this bill of entry, so that you don't have to again, go to journal entry and link those, make the changes and, increase your burden to do the same activity. So bill of entry is having a very beautiful feature where you can create these two accounting and, two things which directly impacts the accounting. So these two are very interesting features related to accounts having, one was having impact in account, the other is not. But these are quite interesting and good to explore on. Finally, what are the best practices for keeping stock and accounting module aligned? So for an organization wherein there is, a large number of people who are maintaining the stock and stock transactions, there is an entire department of accounts which is maintaining the books of account, which is, which is trying its best to keep its book clean, neat, and accurate. So what should be the practice if they are following, due to which there will be an alignment in the stock and the accounting module? First is keeping the data accuracy in configurations. So as I showed you before, that there are accounting type which has to be, correctly assigned to a particular ledgers. That accuracy has to be there coming from the accounting team, so that whenever those transactions are happening, the correct ledgers are getting, triggered for those transactions. So the accuracy in the configuration is the first and foremost thing which is required to keep an alignment between stock and accounting. Second is to have a regular reviewing and reconciliation of accounts with the stock balance. See, ERP is an integrated, our ERP is an integrated software, which is, you don't have to do two things. If you are doing one transaction, it is taking care of accounting also, and it is also taking care of stock module also. So time and now, it is good thing, or it is a best practice to do a review or a reconciliation between the accounts and the stock balance, there's the stock balance report. Along with that, in the balance sheet, you also see the amount in the stock ledgers. So those review and reconciliation has to happen, so that there will be an alignment. And if there is any kind of error, what could be the reason for that? It could be due to wrong configuration. It could be due to an unauthorized access given to the user, wherein they could change the accounting, ledgers when the transaction is happening. So there could be n number of reasons due to which there will be a misalignment. So it is better to review and reconcile those balances time and now, to keep checking the reports of stock and accounts periodically. Review and reconciliation is one part, and checking the reports of stock and accounts is also a different thing. How it is separate. Over there is a chance of bringing the physical stock into the place, over here you are simply checking the numbers which are showing in the stock balance report and the accounting report of the balance sheet. Valuation of stock matching with the accounting data. So the valuation which is coming from the system, if you are having a manufacturing unit, if you are involving a lot of process where the goods are getting consumed in between, so obviously your SFGs and FG will pile up in terms of the valuation. Their valuation rate will go up as and when you are consuming those raw materials and consumables. So a valuation check has to be there for a particular transaction. You can take it on sample basis also, so that you will come to know that things are flowing as required, as desired, and as it should be. Okay, so the matching of valuation of the stock with the accounting data is very much necessary. Setting up roles and permissions for accounting functions is very much important. The system, if this thing is not checked, then it is an open, it's an open bomb, it's a time bomb. Now or in future, it will anytime explode. So it is very much important to keep a check on the roles and permissions which we are creating into the system and which we are assigning it to the users, so that the unauthorized people are restricted, to not check upon those things which are not relevant for them and which they are not supposed to do. And finally, a regular audit of the data in ERP against the physical stock and balances. So audit in terms of what is the number which is telling physically of a particular stock and what is the balance of that stock into the system. So if that is done regularly, then this really helps the organization to keep an alignment into the stock and accounting. So that's it from my side. Any questions? We are open for the question. Yeah.
Yeah, hi sir. This was a nice question.
And also I'm sharing the feedback form for this session. If you found it interesting or it is valuable for you, please share your feedback over there. I'm adding that in the chat box. So yes, if there is any questions.
I think question.
Yeah. Hi sir. I am Sandeep. Hello.
Yes, you are audible, Sandeep.
Yeah, it was a nice presentation, sir. Actually, it's very helpful for me. And see, one of my client is using a legacy tally for this inventory also, sir. Like how the migration will take place. Like you're facing issues while migrating from tally, sir.
Okay. So a strategy has to be chalked out. If you are migrating data, you want to migrate data of stock from Tally to ERPNext, right?
Yes, sir. Whole accounting, sir. Inventory also involved.
Entire accounting. Correct.
Sir.
So for that, see, the best thing is to start with the closing balances. Whatever closing balance are there in Tally, that is what we are going to migrate over here. Correct? That is what you are asking, or you want to migrate the entire transaction to ERPNext?
Yes, sir. Total entire transactions, like past 2 to 3 years of transactions related to inventory and all, sir.
Okay. So Tally and how you want to do that? Is it something you want to do with API, or you want to download it in Excel and then upload it in ERPNext?
Yeah, we will be downloading in, or we will take the Tally backup and we will use it, sir.
So see, then my dear friend, you will have to work very diligently. Reason is, in ERPNext, if you want to upload the transaction data, just go to a purchase transaction, select a template, download it. You will find hundreds of fields, and those fields which are relevant to the accounting, which are relevant for the particular business which you are, you are doing you are using this ERP. So all those fields has to be, very diligently marked, and you have to prepare, you have to utilize your time very diligently to first prepare those templates. If the templates are prepared, then I would suggest you do some transaction manually first, and then you download it from the ERPNext, and you will come to see that how elaborately or how ERP accepts the data. Okay. So if you do this exercise, you will come to know that what kind of work you will have to do in order to migrate data from Tally to ERPNext. So it's not a straightforward thing. It will take a good amount of time for you. But yes, this is how strategy has to be, where you make it manually happen. You download it from ERPNext. You come to know that what are all the relevant fields for you, and then you have to prepare that Excel template sheet and then start uploading for your utilization one by one.
Okay. Okay. Thank you so much, sir.
Yeah. Any other questions? I think a feedback form has been shared by Sejal. It will be very good of you to provide us the feedback so that we can come back with the topics that you want from Indictrans, and it can be good value addition from Indictrans to yourself going forward. So Sejal, I believe no questions are coming. Then it's good to wrap up.
Okay. Can we have your mail ID, sir, for any service?
I think we have got one question: how we are going to manage manufacturing accounting at each stage? So each stage, as I believe, you are starting from raw material stage to SFG 1, SFG 2, and finally the finished goods. Is it what you are asking, sir? Yes. So what we generally do, see, as I showed you in the manufacturing, when there is a manufacturing entry coming in ERPNext, the strategy or the plan should be to first prepare a BOM. BOM will be for FG, but before that FG, the SFGs are to be prepared. So there will be BOM for SFGs also. And when you are making SFGs, there will be a warehouse coming into the picture when you will be manufacturing it. So those warehouse where you are manufacturing SFGs, we are tagging the SFG. If you are having a ledger of SFG, it will help you to keep a track of what all semi-finished good is lying in your company as of a particular date. So as and when you will produce those SFGs, the impact of those figures will start coming into your financial statements of balance sheet. So this is how we do the configuration at the warehouse level. If you are adding the overheads during your manufacturing process, so those overheads are also tagged with a particular ledger in ERP from our chart of accounts. So as and when the process is completing, the value of those overhead is getting loaded into the SFG or FG, and a reversal for those overhead that the ledger which we have tagged will be credited as and when you are doing the manufacturing entry. So it's quite simple in accounting. Either you are changing the nature of the goods when you are going at different stages of your manufacturing, you are consuming the goods, or I must say, if you're not following the perpetual inventory, and if you're directly consuming everything at the time of manufacturing, then you're booking expense at the same time if you're using the entry type as material consumption for manufacturing. But if the perpetual inventory is enabled, and if you are simply manufacturing the goods, it's nothing but changing the nature of the goods, which is getting impacted in accounting, and it's nothing but changing but loading the value of the overheads into our FG as you are progressing. So this is the fundamental, how we manage the accounting with respect to manufacturing. Any specific queries you have will be, I think Sejal can share the email, and if you want to ask any particular case or scenario. Yes. Okay, I think I respond to your query. Great, thank you. Yes, any other queries from for audience.
So I guess there is no further question. If you have any question, I have added the email ID. You can send it the questions over the mail as well, and it will get if you have not given the feedback, you can give us feedback on the feedback form. Thank you so much, Ghanshyam, for such a wonderful session for today, and thank you to all the participants for such a active and responding session. Thank you so much, everyone.